Hey guys, Wyatt here, the coastal agent with Block Realty. In today's video, I wanted to share with you what's happening in San Diego real estate market for the first quarter of the year, what to expect as we come into the peak spring season of the market and beyond. I'm going to cover a couple of key elements. One's going to be the median sales price, where we've been trending with that. You might be surprised that it's not always an upward trajectory. Inventory levels, where we were, where we're going with that. And then also I'll touch a little bit about the stability of the market and where I think things are going to go moving forward past the spring market into the fall and the winter of 2021. So let's go ahead and jump in. All right, so the median sales price in San Diego County, it's no shocker, it's up 20% from this time of March of 2020 till March of 2021. But if you look at it in March, that's when the whole pandemic broke out. So there was a little bit of a dip in the market. As you look at this chart here, we went actually down a few percentage points until we hit May. The velocity really took effect, from May until August of 2020, we saw levels 9.8% level of appreciation on the median price. It kind of flatlined out in August through the fall and holiday season. And then now we're picking up steam again as we come into the spring market. So from January of this year until March of this year, we've seen another 9.1%. So those two velocity points have kind of made up that 20% level of appreciation. We're now at $810,000 as a median sale price in San Diego County, which is absolutely crazy to think about it. But if you look at this other chart, it hasn't always been upward. I mean, if you look at the trend of the median sales price for the last 3 years, we did see some dips. We saw in 2018 that there was some dips in 2019, and then even in 2020, we saw a few dips even coming into the last part of the year. I think we're going to continue right now to see as we get into the spring market, median sale price is going to continue to rise. So I think that it'll kind of flatline again, similar to what you're seeing in the chart here, towards the end of the summer, into the fall and winter season. Especially if interest rates go up a little bit, we might see a little bit of a dip in the median sales price of the house. The other key factor though that we're going to look at is going to be inventory levels. A lot of people know inventory levels are super low, but they actually have been super low far before the pandemic hit. If we look at the chart here, starting in July of 2019, we had levels at 5.4%. We're now at less than a month of supply. But if you, in the chart, by December of that year, we were less than 2 months supply. And then by December of 2020, we were less than 1 month supply. Now, in March of 2021, we stand with a 0.9% month of supply, so less than 1 month. But if you back it out and you look at $1 million property and under, we actually have only 0.5 months of supply. So that's 2 weeks of supply in $1 million and under price point. Super, super low inventory levels driving that price up. All right, so I also wanted to cover the stability of the market, where I see it going this spring and moving forward into the fall of 2021. I ran some interesting reports. I wanted to compare, what's the financing that's taking place now compared to the last market? Because the last market, the cause of it fumbling was the financing was super bad. We had adjustable rate mortgages, interest-only loans that people couldn't afford when they finally adjusted. So that created a glutton of inventory coming on the market and caused, we've got the opposite where we had a bunch of supply and no demand. In this market, we've got quite a bit of cash. I was looking at, the first quarter of 2021 in San Diego County, there was 16% of the transactions at an average median sale price of $810,000 were all cash purchases. In those cash purchases, the median sale price was $910,000 all across the county. And if you looked into markets like, the coastal market, La Jolla, PB, Ocean Beach, Point Loma, 29% of the transactions were cash, and the median sale price of those were $1.9 million. So a lot of cash. I don't know who's bringing in all the cash, but it's showing that there's a stable market. And then moreover, when I talk with a lot of the lender clients that I have, is that most of the financing that's going on is conventional, fully amortized 30-year fixed loans. So these people are qualifying in their current state for that loan. It's not going to adjust. So I'm assuming that as long as they can continue to pay, I think the only thing that might rock this is if unemployment rates go through the roof. But the unemployment rates are actually getting better, as we start to open up. The vaccines are being distributed. So I think that we might see a slowdown in the market. Like as I mentioned in the median sale price, we've had these like peaks and plateaus. We'll have a little flat line. I think we'll experience that as we get into the later part of the summer, coming into the fall. Depending on what interest rates do, if they go up substantially high, it'll probably flatline the market, maybe even dip a little bit. Like you can see, we've had a lot of those peaks and troughs in the market previously. So if you guys want a little bit more in depth of your situation, if you're thinking about selling and you kind of want to know what to expect from the buyer standpoint, or if you're looking about buying and you want to know, what is it going to do, like what the environment looks like as far as the offer, competitiveness, go ahead and reach out to me, 619-200-3236, or on the web, sdcoastalagent.com. Hey guys, thanks for tuning in. Make it a great day. Bye-bye.